Welcome to Dragonfly Trading. Glad you found my channel. My name is Carrie and I'm a full-time trader and I'm also a mentor for struggling traders. Today's video is going to be an update on Bitcoin. Hopefully we're going to get some clarity between the bull and the bear scenarios. If you like the content, take the time to like and subscribe. Also, if you are interested in learning how to navigate these markets yourself and not rely on anyone else, the link is in the description below for my course. All right, let's get started. All right, so we're starting out on the weekly time frame. As you notice here, the weekly has broken the 20 moving average. This is not a good thing for Bitcoin. In the previous bull runs, Bitcoin used the 20 moving average as support. As you see back here, it did wick through it, but it got bought right back up with a bullish candlestick pattern. Now, there's a lot of days in this week, but we've already had a weekly candle that has closed underneath the 20. That was our first bearish signal. This week, we really need Bitcoin to leave, however deep it comes, it needs to leave a wick and it needs to get out of this position that it's in. The goal on the weekly time frame is for Bitcoin to get back above its weekly 20. Until it does that, it will remain bearish. Now, if you notice also in the previous bull run, on the weekly time frame, the TDI never broke 50. Now, between 50 and 40 is the bullish support zone. As you can see right now, Bitcoin is threatening to break 50. The deepest we would want this weekly time frame to come is the 40 line. It needs to find support on 40 and push up again, breaking through the bullish resistance zone. So between 60 and 70 is the area that we do not want to see RSI get rejected from on a weekly time frame. We want it to pivot and come straight through that area, getting back up above 70 like it did back here and all back here in this previous bull run. All of these peaks above 70 is what we want to see. A hit to the bullish support zone and then a push up through 70. All right, so if you notice back here in the previous bull run on the 3-day time frame, Bitcoin never broke 40. It wicked into the 50 moving average. As you can see, Bitcoin has broken the 50 moving average, and it is threatening to break 40. It actually has broken it. Now, if it can hold 30, which is a bearish signal, we need to see the RSI move straight through and back up above 70. This is very, very important. Okay, so our first real bearish signal was obviously breaking the 20 moving average, but it was also the 2-day and the daily having a rejection here in the bullish resistance zone. Okay, this is our first sign that Bitcoin could be transitioning into a bearish leg. It can recover. It needs to V-shape recovery, find support on the bullish zone, and continue through. If it can push back through up above 70, Bitcoin can definitely save itself. All right, let's talk about the bull and the bear scenarios for Bitcoin. Because this correction is getting so big in time, the only thing that it could be for a bullish case is a fourth wave. That would mean that this wave to the upside was a wave 1 with a wave 2 pullback. This inner, it was a 1, 2. This was a 3, a 4, and a 5. Bitcoin is threatening to overlap this area. This would be a fourth pullback and then a push up for a fifth. If this wave is going to be the start of something, we need that push to the upside, and then Bitcoin will need to correct on top of its all-time highs. This would be a wave 1, and this would be a wave 2. Now you're probably asking, Carrie, why can't this be a nest? If we're going to call this a 1-2, 1-2, and 1-2, it does not make any sense at all of why a lower degree 1 and 2 would be much bigger than a higher degree 1 and 2. With that being said, the only thing that this can be is that this wave is completely done and that it's a wave 1 pulling back for a deep wave 2, or this is a fourth wave. Now, I'm more leaning that the way that this structure looks, that it would be a fourth wave. It doesn't make a lot of sense to me that we have this wave 1 to a wave 3 that didn't even hit the 1.618. A very tiny, tiny wave 4 compared to this wave 2, and then a fifth wave. It just does not look correct to me, counting it that way. So the bullish idea is that this is a wave 4. These wave 4s are completely allowed to overlap their prior wave 4. Now the deepest we would want to see it come is approximately 42,877. We do not absolutely want this 0.5 retrace to be taken out, and this previous correction. That would be an absolute market structure break. The same thing I've been saying in all of my videos. Once, if it holds and it pushes to the upside, this becomes our new market structure break. No more coming through this correction at that point. And of course, the bear case. The bear case is that this move to the upside was an ABC structure, and that it's potentially done. That it came up into what we call the expanded B pocket. So it would make this wave an A wave. This would have been a B wave. And it means it's giving yellow leg a partner to the downside. Now, it can absolutely protect this low and make a higher low. That would be the ultimate case that we would want to see. This would still be extremely bullish for Bitcoin. It would mean that we would see the biggest run we've ever seen after this. But it can also not protect the A wave and come much deeper, making an expanding flat. Which one it will be, we don't know. We have to wait and see once the structure starts taking place. Coming through this correction will be our signal that this is happening, but not until then. All right, let's take a look at the correction. The way that I see it is that this is a 3-wave move. That is a very good sign. I do not see this as a diagonal. If you were going to try to make it a diagonal, you would either have to say that we had an overthrow or the third wave doesn't hit the trend line. It's a better fit that it's a 3-wave move, which is a good news for Bitcoin. Starting off in 3 waves means it's corrective. Currently, it's giving the yellow leg a partner. Now, if it can protect this low and make a higher low here, that would be very good for Bitcoin. The deepest we want to see it come is the 0.5 retrace at 42,877. Coming through there would not be good and would lead to bearishness. Now, let's talk about the structure. Say that it gives yellow leg a partner and it comes deeper, and then it bounces and adds a connector. This is where it's going to get more bearish. That means that this leg will need a partner and it comes deeper. At this point, if it bounces with a connector, it means that this entire leg needs a partner and down it goes. This is how bear markets start. If you notice back here, this started off correctively. We had a 3-wave move. Okay, this would be a 3-wave move. We had a bounce for a connector, and then it gave itself a partner. Give itself a partner. This is when it went bad. It added a connector for this leg. What would happen when Bitcoin gets to this structure where it's not supposed to break? Adding a connector. Then this entire leg will need a partner. And down it goes. And this is how it moves correctively, but in a bear market, giving this leg its partner. Now, I'm not saying this is definitely happening, and I'm not trying to sound bearish, but Bitcoin really needs to protect this low. It needs to not come through here if it's coming deeper. And this RSI has got to recover. This rejection here in the 70 zone was not good. Okay, it was our first signal of transition. This will be our second signal, and if it rejects again, we've got signal number 3. And there's only 3 signals of transitioning into a bearish trend. I hope you enjoyed this video. Hit the like and subscribe, and I will see you in the next one.